Okay, thank you for joining us. Let's start with this free webinar that we're going to offer for you in Fund Your FX. And I'll start with a short introduce about myself. My name is Snir, and I'm in the trading business for the last 15 years. I used to trade for my living in the Forex market, the stock market, and traditional options. Also, I'm a CEO, a former CEO founder of thefivers.com, still one of the most reputable and large prop firm in the industry. And I'm now in a new position. I'm the new CEO of Fund Your FX proprietary trading funds. And in this webinar, I would like to share with you my experience. It will be, of course, just a taste of what I have as my knowledge and everything that I learned and the method I use to trade, which is mostly rely on supply and demand levels on the charts. So before I start, I guess that you all, I'm not sure if you have some experience of trading or if you are a beginner or if you are an experienced trader, but what I learned through the time years ago, I'm not sure that it's accessible in many places on the net. I know that traders use and still mainly learn to trade with indicators, with oscillators, and many other tools that, in my opinion, and of course it's only my opinion and my experience, only cause confusion and misleading in this beautiful profession, trading forex or stocks or whatever you trade. So what I'm going to teach you, or not teach you, but what I'm going to show you here in this webinar is what exactly is supply and demand level, why supply and demand level are the most critical levels on the charts, and why is the language of the price that if you want to be successful as a trader, it's something that you must know as a trader in order to succeed. And I think if you don't know what exactly is supply and demand, and if you're not aware of what I'm going to show you now, I believe that it's going to change your mind and the way that you're going to look at the chart from now on. And this is, of course, from my experience. So before I go to the chart, let me explain you something on how the real market work behind the scenes, because this is what defining the supply and demand levels. And we are, as retail traders, we are not, to be honest, we are not even exist on this chart. So we need to understand, and I guess you heard many times in the journey of your trading experience and learning, you heard many times, follow the money, follow the smart money, the big money, follow the large institute. Probably you heard buy low and sell high. Many of these terms that I will try to explain you the meaning of all this. So the large institute in real market conditions, okay, things work in different. It's not retail traders like me and you that you can go through the platform to the empty platform, whatever platform you use, and just put the amount size that you want to open the position and click buy or sell. This is not how it works in large institutes. And when I'm talking about large institutes, I'm referring to central banks like Federal Reserve or the Bank of Europe, large hedge funds, public banks, any other large institute that have significant amount of money when he is willing to buy or to sell something. And in the real market, when a large institute, for example, let's take, I don't know, the Federal Reserve in that case, when they want to buy a huge amount of US dollar against the euro, and they just put significant amount of limit orders in the bank system. They are I guess you know they are not trading in the MetaTrader platform. None of these platforms and none of this structure that you and I know. And when they want to buy a significant amount of money, there must be available US dollar for sale on the other side. So this is how in the real market things works. And when a large institute put limit orders or a lot of buy orders, for example, okay, to buy US dollar, let's take, for example, the central bank of the US, okay, and the reason why they're doing that, it doesn't really matter in that case. What matter is that when they're willing, the Federal Reserve, for example, want to buy $1 billion, okay, or whatever amount of US dollar at the same moment, he won't get all these orders filled in a minute. So behind the scene, what happened is that these limit orders starts to fill all the sell orders that available behind the scenes. Every dollar that available for sale is filled by this large institute, and this large institute start to fill all the orders until there is no more US dollar at some point that available for sale. And let's say, for example, that for this large institute, in that case, it was the Federal Reserve, have still $500 million that waiting to buy, but no sell orders are available. What I'm trying to say here, when we have a huge, significant imbalance between buy orders and sell orders, in that case, for example, if we have a lot of buy orders waiting and none sell orders available, then in that case, this is where we're going to see the price bounce and rise up very fast and aggressively, as you probably sometimes see on the charts. And vice versa, when you have significant imbalance between sell orders and buy orders, okay, when we have a lot of sellers but no buyers, then you're going to see the price drop down very fast and aggressively. This is behind the scene how supply and demand happened. This is how they formed, okay? And that's how the real market works behind the scene. They don't use indicators or escalators. They have their own reason for that. For example, if it's the Federal Reserve, sometimes they have other reason like maybe the economic situation forced the Federal Reserve to rise up the interest rate and buy more dollar or whatever. Again, as a retail traders, the reason doesn't really matter. And unless you have some inside information, we can never know before it happened. We can only see it after it happened. We're going to see a huge movement, a very significant drop down from some level, or the price rise up from some level very fast. The orders that remain below or up after the price run away from that level, these orders that belong to these large institutes that cause this imbalance, these orders become what we called unfilled orders. The unfilled orders, if you never heard about this, have significant play in this game. Most of the time when you see the price move, one of the reasons is the unfilled orders up or down that attract the price to get back to this level and fill the rest of the orders that waiting in the bank system behind the scene. Okay, I will stop here for a few seconds, and if you have any questions, this is the time to ask before I continue. I'll try to do my best to answer all the questions. Okay, Just want to make sure again that everyone can hear me and everything is fine. I want to see your comments on the chat. Okay, that's also good. Great. Okay, so that was a short explanation of what is supply and demand level, and to be honest, is the same principle in any other market in our life. When you have a lot of buyers and none of sellers, then the price will rise up significantly. And if we have a lot of sellers but no buyers, you're probably going to see the price dropped. It doesn't matter in any market in our life. This is how market works. Okay, now I'll go to the chart soon. I'll try to explain you exactly how it looks. Okay, again, after we explain how these levels formed by the large institute, which can be many of them. I mean, the hedge funds, public bank, central banks, any other institute that represent big money, smart money, what we call. Okay, and this is the meaning of price action. Understanding where these unfilled orders lying down on the charts. Okay, sorry. Okay, before I continue, just want to make sure also that you can see the screen. What I'm showing now is how were these levels created from the slideshow. Just want to make sure this is what you can see. Okay. Yeah. Okay. Give me 1 second just to change the screen. Going to the chart now, where I guess this will be a little bit more interesting for you. Okay. Everyone can see the chart? Okay. So this is example for the euro against the dollar, euro-dollar chart. Okay. And this is what we have at the moment. Let me just change the zoom. And I'll try to explain the meaning. Okay. Okay. So what we can see here at the top is why and what caused this significant drop in the price. Okay, you probably know this situation. It's happened once in a while because the market is always live and move. New supply and demand always created on the chart, and we have old supply and demand that we can find from the past, and the price is always moving. Many times you can see this type of behavior after, for example, high impact news released. Okay, but not always. So what happened here at the top? Let me try to explain you this situation, because this is the exact image that we need to look for when we are looking for supply. In that case, it's a supply level. Supply because the price dropped very fast and aggressively from that level. As we can see, in that case, by the way, it is the hourly time frame chart. Okay, 1H time frame. So these few small candles, as you can see here, represent the action of a specific large institution that willing to sell huge amount of US dollar against the euro. It doesn't matter. Again, let's consider this just to make it less confused. Let's say that this is a gold. Okay, so the large institute now is willing to sell a lot of and put sell orders in the bank system, but it's a huge amount. He won't get all these orders. He won't be able to sell all the orders at once. Again, it's not like a retail trader like me and you that we can set a limit. We can set a market order even now here and put a position size on 10 lots or 20 lots, click buy, and you'll get execution immediately. This is not how the real market works. So this large institute willing to sell here huge amount of US dollar against the euro, and the orders start to get filled. Now he need to have buyers on the other side. This is a real market. For every dollar that you want to sell, there must be someone that's willing to buy on the other side. Okay, so the orders start to get filled, and usually when they willing to sell huge amount of US dollar, it's not at a specific price, it's approximately at some level. In that case, from that point to that point, the price goes up, a little bit down. All the sell orders that this large institute set in the bank system start to fill all the buy orders that have at the same level, at the same area, a little bit up, a little bit down, and that's the level. So this is what we call when this large institute start to collect and fill all the buy orders. But at some point here, when this large institute still have a lot of US dollar to sell, hundreds of $1,000,000. Okay, the amount is doesn't matter. You'll understand why it doesn't matter. What matter is that we will be able to see with our eyes this image that we are looking for and understand the meaning, because I don't really know the amount that caused this. Okay, no one, no. Again, unless you have inside information. At some point here, there were no more buyers to buy all the sell orders, all the US dollar that this large institute have here. And then at some point here, we got a situation that we have huge imbalance between all the available US dollar for sale and no buyers. Okay, the imbalance was too much, very, very significant between buyers and sellers, and then that's why we see the price drop down very fast and aggressively and continue all the way down. Okay, but we can see the initial movement when the price run away from that level. I guess you know what I mean. Really run away from that level very fast. All the orders that, all the US dollar that this large institute still wants to sell here, now it became what we called unfilled orders. Okay, exactly as you heard it, all the orders that didn't fill because there were no more buyers at some point here. And this is what caused the price to drop down, as you can see. Unfilled orders that still lying here at this level. And mostly this is how it looks. A few small candles that moving aside, as you can see here, in a very tight range, okay, and then dropped. This is an example for supply. Of course, I'm going to show you also another example of demand after that. The unfilled orders, okay, is exactly where we want to take the action, but only at the first touch of the price at this level. Okay, why only at the first touch? Because the simple logic, once the price will retest this level, all the orders, the unfilled orders, will get triggered. Okay, and then we're going to see the price move back, move down, because the unfilled orders got triggered. They are still here, they are still lying in the bank system, and just take it as a fact. I won't say it there forever, but it's not that this limit order going to be canceled after a few seconds or not even few hours and not even few weeks. In some cases it depends. It's a little bit more complicated, but I won't get into all the details now. I just want to give you, I will say on a nutshell, and a small taste of what is real price action and how it works. So these unfilled orders will get triggered once the price retests that level again. And if it's going to test this level again, then it's going to fill another $200 million, okay, for example. And if it's going to go back again, it's going to fill another $100 million, and then we're going to see the price move down again and again. As much as the price touch this level, as higher the risk become, because we don't know how many unfilled orders still remain on that level after a few testing, okay? But we can say for sure that the first time is the most safe time to take action on that level, okay? That's a simple logic. Any questions, guys? Okay, feel free to drop your questions if you have, and if something is not clear, just let me know. If my English is not perfect, I'm sorry for that. I try to do my best, but really feel free to ask the questions if it's not clear for you. I'm just curious to know how many of you really heard about this method of the price and about this supply and demand price action. Just write down if you, okay. How many of you, by the way, trading using, okay, I'm glad to hear that. Yes, we're going to cover a way to mark the zone. Yes, shortly. Okay. How many of you using indicators and oscillators and this type of tools? Until here, everything clear. I'm really glad to hear that. Okay. All right, let's continue. So let's move from that point. And again, this is the exact image that we are looking for. The picture that you're seeing here above, the few small, it's usually between 2 to 8 to 7 few small candles that really moving aside in a very tight range, as you can see here. It seems like a small cube, and then the price dropped significantly. As fast as the price dropped, then the strongest this supply. I mean, it indicates that we have more unfilled orders. Now, I don't have exact number to tell you how many pips the price need to run away from that level. There is no number for that. I cannot give you the exact number. Okay, you can just take a look at this, and this is what we can see here. As for how to mark those levels, I'm going to get there soon. I just want, again, to make sure that you understand the principle of supply and demand, because here we also have a very small one, not the best one, few small candles, and the small drop considered to this one. Okay, and if you continue, we have also this level. If we gonna zoom out or zoom in, sorry, for a lower time frame, 15 minutes, we're probably gonna see, instead of these two candles, 4 or 5 candles that moving aside and then small drop. Then probably we're gonna see that. Now it depends which type of trader are you. Okay, if you are a day trader, then you're probably gonna look for these levels on a lower time frame. If you are a swinger, then in the middle time frames. And if you are a long-term trader, probably in the higher time frame, but we won't get into this now. I don't want things to be confusing. So this is how it works. Okay, now I'm doing what I'm doing because I want you to see all the charts and until the present, and this is where the price now. So if I'm looking at the chart now, okay, to be honest, the and I'm using this 1H time frame, the most significant place that I would set a sell order, even from now, okay, is the top here, because it represents what we just saw here as a great supply, meaning that once the price touch this level, we most likely, I won't say that the price is going to touch this and continue all the way down, but at least we're going to see some reaction. And why is that? Because of the unfilled orders here on the left. Okay, now again, I don't know the way you used to trade, but it's a little bit hard to understand at the beginning. What happened with the price now, I won't say it doesn't matter, it is matter. But remember, the story is on the left, always. Okay? If the price here, and I'm looking for a sale, I'm going to go up and look at the left. Okay, I have this level and this level and here. Nothing really significant. Okay, here we have some resistance. And then up here, maybe here we have some small supply that we saw. Okay, not very significant. Go up all the way up to here, and this is the next available supply that seems really good, and I'm going to take the risk here and put maybe a limit order even, or just wait for the price to get there and open a market order. Anyway, I'm going to sell, probably going to sell at this level. Now what I'm going to say here, I don't want you to run into the chart tomorrow and put a sell limit order here, because there are more parameters that we need to take in consideration before we do so. But this is a great supply. Okay, I will mark the entire zone in a minute. Okay, this is a great supply, and what I'm trying to transfer you here is that always look up and the left if you want to find where to sell, or down and the left if you want to look for a great level to buy. So for example here, we have these few small candles. Okay, I would consider even all this, but it seems like the price, you probably know it's with the name consolidation, but you can see that the price move aside here, and then we can see this huge gap. What is gap? Okay, consider it and assume that there is a one big green candle. In that case, start here and end all the way up here. Okay, this is the gap. Most of the time it's considered as supply or demand. In that case, it's a gap up. Okay, the only issue with gaps that we cannot always really identify where exactly the imbalance, where the jump came from, the significant jump of the price. Maybe it's here, maybe here. We can never know exactly. Okay, but in that case, the reaction that you can see here of the price, okay, the price touch this level, and the unfilled orders here, in that case, it's a buy orders. Okay, the unfilled orders got triggered by the price, and therefore you see the price continue up. Okay, now this demand is not relevant anymore, because again, we trade this level only at the first touch of the price. Okay, that was the first touch. I'm not going to use this level anymore, because who knows if there are still unfilled orders waiting for the price here. We already filled the unfilled orders once. I don't know if at the second or the third time there are still unfilled orders in the bank system here. I just know that the first touch is the most safe. Okay, so this is where I'm going to look. Sorry, this is where I would open here a buy position, but this demand is not relevant anymore. Now, I have only this sell option. If I want to look for a buy position, I need to go down and left and see where is the next available demand. And in that case, I don't have any more left. I can do like this, but it's going to take a while. That's the only reason that I will switch from 1H maybe to 4H time frame and see if I have something on the left, but not here, but below somewhere. Okay, here I don't have nothing. Even on the daily chart, we can see that the price, okay, is here. Now, if I'm looking on the daily chart and I'm long-term trader, okay, I guess somewhere here at the bottom, sorry, somewhere here, if I will switch and zoom in at this time to the 4H time frame on 1H time frame, I'm probably going to find the image that I'm looking for, a few small candles, and then the price rise up significantly, very aggressive and fast. So that's the only place I'm going to take action for a buy orders. But let's go back to where we've been. I'm going to show you how to identify those levels and how to mark these levels back into the H1H time frame. And okay, and don't get confused. These levels are also can be breaking by the price, even at the first time. Nothing work in 100%, okay? But I will explain you the huge advantage of using this level. Now, usually how I mark these levels is once I can identify with my eyes, and it's about practice. After a few weeks, after a few months, and you're going to see more and more situation like this, your eyes will be more practice, and you'll catch up this image much easier and much more professional. In that case, it's very clear. A few small candles, it's exactly what we are looking for, and the drop. I will take another line to mark the, okay? Now, if it's a supply, then I will set this top line, and I will consider the highest wick between and among, sorry, the highest wick among these few small candles that represent the supply for me. Okay, so this is where I'll set this line. And now, the bottom line, again, there is no one way to do that. Some of the traders will take the lowest wick among these few small candles. In that case, it's here. Some of them will take some point that connected a few open and close of a few candles among these few candles, as you can see here. Okay, I won't say that this is the right way, this is the wrong way, guys. Okay, you'll find a way to do that, and you're going to decide what's better for you. There is advantage and disadvantage for each one of the situation here. And as I told you, we can never know exactly where the price going to take an action and exactly where all the unfilled orders are lying. Maybe here, maybe here, maybe at the very top. We don't know. We don't have this information, and we're not going to have this also. If you set the line here, then this is where we're going to open the sell position. The stop loss can be a few pips above the top here. Okay, if we set the line here, then we're going to open the position here. Anyway, the stop loss is always a few pips above the top here. Okay, now if you mark the level as this, then as you can see, the risk is a little bit higher. Also, once you start to work supply and demand, you know exactly how to mark these levels, and one of the advantages is you know exactly how much you risk, because if the price go up and break out this supply, in that case, the simple explanation is that the unfilled orders that I was relying on them at this level are not relevant anymore. And I don't have any good reason to stay in this position, because from that point, I don't know where the price can go. If it continue go up, maybe the price is going to go up to this level and then go down a little bit and then continue up. I don't know. And when I don't know, I'm not going to take an action. I'm going to take an action only what I know and only what I can explain with the logic of the price action. So if you as a trader set the line here and take in consideration this lowest week, okay, then the risk a little bit higher, okay? But you might enter the position if you set the line here and you're going to say, okay, I believe it's the right level to open the sell position. The risk is lower, but who knows? Maybe you're going to miss this position. Maybe the price is going to touch this level and then drop. So there is no right and wrong in that case, okay? But that's not the problem. You'll find a way once you start to practice and practice your eyes to identify this image, okay? Exactly how it looks here. Few small candles and a drop or and a bounce, okay? And as strong as it happened, then it's better. As far as the price run away from that level, it's better, okay? The only thing you need to wait for the price to go back to that level and open the position. Okay? Any questions about how we mark those levels? And okay, so if you have any questions, just leave it on the chat box. I'll take a look. All right, let's continue. By the way, this principle works in any market. If it's the stock market, if it's crypto, if it's indices, if it's commodities. So I will give you the chance to choose one of the assets that you want to choose now, and I'll do the analysis on these assets. If you have something that you preferred, just write it down, and we can continue from that and can show you more examples and explain you about the advantage and disadvantage and why supply and demand. By the way, it's just part of the whole language of the price, but it's the most important part in that case. It's the heart beating of the market. So if you have any asset that you preferred and you want me to take a look at, just let me know. One more thing, supply demand is not giving us the indication of only where to open positions, okay? It's give us much more wide picture of the market of the same asset that we are looking on. I'll take, for example, any other assets. Let me choose something else. Okay, again, if you have something that you prefer, just write it down. I don't know, let's take the Aussie against the Japanese yen. Okay. And this is what we have now. There are, by the way, 4 different types of supply and demand. 2 types of demand and 2 types of supply. I will show you shortly. So again, it's the 1H time frame. This is the Aussie against the Japanese yen. And let's go over the charts and see what happens here. So now we can see that the price touch this demand. Okay, we can see a small demand. By the way, this is one of the type of the demand. We can see drop and the small candles. It's not the perfect image that you saw before, but again, it represents somewhere here the way the large institutes collect and fill all the sell orders that was available at this level. And you can see that the price really bounced very nicely from that level without stop all the way up. But the initial movement here was, at least from 1H time frame, seems like a very good one. The reason of the reaction here is the unfilled orders from that level. That's why you're seeing this reaction here, the price move all the way down to test this level to fill the unfilled orders that lying on the bank system here. And therefore, we can see this reaction of the price. Okay, so 1 second, let me just read the question. Okay, so this is a nice demand. This is the reaction. In that case, if I was a trader that set the line and take in consideration the highest wick, then I would get a nice position. If I would put my line somewhere here, okay, then I might miss the position. I don't know. Okay, so this is the reaction. We can see the reaction. What caused this reaction? This demand. And then the price move up. By the way, in a lower time frame, we might see much more opportunities, but less credibility. Okay, still, once you implement this method and work on your supply and demand, you understand that the risk that you're going to take is limit and usually very tiny. Then this level will help you to get in one of the most important parameters for traders in order to become a profitable traders, which is the risk-reward ratio. Okay, because one of the most exhausting thing as a trader is that you can win 3 positions and then in one position you can just wipe out all the profit and even more than that. And this has happened when you are taking small profit, but sometimes you're going to take also large loss because all these psychological issues again that we're not going to get into this. I guess all of you know this. So this level is going to define you exactly what you're going to risk, and that levels will help you to implement a positive risk-reward ratio. Positive risk-reward ratio means that the average for all the positions that you have, for $1 that you're taking in a risk, you winning $2. Okay, if you have a risk-reward ratio of 1 to 2, then you are in a good direction. Okay, for each dollar that I'm risking, I want to have potential of $2 profit. Okay, so if I'm going to risk all that level here, then you can see what could be the profit potential. Okay, by the way, supply demand will help you also to identify where I'm going to close the position, where I'm going to close part of the position maybe, where I'm going to close all the position, where exactly and if I'm going to roll my stop loss. Once you understand these critical levels and you understand that the price move from supply to supply, from demand to demand, once in a while it's breaking the supply, creating new one. And once you understand all these levels, you can also identify in a smart way where to take an action when you manage the position, because open the position is half of the job. Okay, manage the position is the second half, and as a trader you must manage the position. And by manage I mean set from, for example, if I'm going to take a long position here and the price move into my favor, let's take this example. Okay, move into my favor all the way up, but here I can see some difficult level, small supply, I wouldn't say very significant one. Once the price reach that level, I must take some action if I'm in a buy position and I'm in a nice profit, which means maybe I can roll the stop loss to break even. Maybe I can close part of the position and roll the stop loss to break even. There is no set rule for that. It's depend on you as a trader and what is your target. But you must manage the position. Now, if the price continue all the way down into my favor and reach that level, which it's not supply, but it might be kind of resistance, okay? We can see here from the left also this level and this level. We have some resistance at this area. Then maybe here I can close all the position, okay? And all the way up, I will roll the stop loss every time that the price will create a new low. In that case, once the price move up at this level, I can take a look down, maybe roll the stop loss below this low or below this one. Okay, you must manage the position always. Okay, you cannot be in a situation that you are in a very nice profit and then you ended up losing the position. This is unprofessional, I would say. So supply demand will give you all the information, almost all the information. Okay, I told you at the beginning it's just one parameter that will help you to deal with the market and then the price, but and understand the whole method of price action, but it's the most important one. So this is how we go in and we can analyze the charts, because if the price now is here, I can take a look up and to the left, and I can see from now that the price might have some delay once he reached that level. Not the best supply, but I can see something here that the price might hold some unfilled orders at this level. And if I continue all the way up here and here and here, I don't see any significant level that might hold the price all the way up. Maybe here we're going to find some hiding unfilled orders that really still hiding on that level. Also, it seems like the price already tested this level, as you can see here. Okay, so supply demand can help you to identify the movement of the price, where the price is ahead to get now, what is the direction, and I'll go to the weekly chart for now and see if I can give you another good example of supply and demand in the higher time frame. Let's switch to another before we end. And again, if you have any other asset that you prefer, let me know. I don't know, let's choose one of the GBP pairs. Okay. I don't know, the GBP against the Canadian. Okay. Okay. So 1H time frame, and we can see that the price is at the moment here. And if I'm going to take a look down and I'm looking to buy somewhere, because when the price moves down, we should look for buy position. And the price move up, look for the good supply on the left, where to sell. Okay. I would say the line may be here, not the perfect one, but I will consider to take the risk once the price reach that level. And approximately this is all what I'm going to risk. I can set the stop loss just a few pips below this level and see what's going to happen. Okay, so this is the pound against the Canadian, and if I'm going to look up, let's switch to higher time frame. Okay, here on the left, to be honest, we don't have something that looks like supply, and the reason I'm saying that, it looks more like resistance. The price will been visit this level here, and then here again, and then here again, and we are back at this area here again. So let's see what we have more on the left. That was the very far past. I mean, look. Okay. If I was a swinger and the long-term trader, I don't see any great level here at the left, to be honest, to sell. We've been above this tiny wick somewhere here. I don't see any significant level to sell here. So I will wait until the price might create a new supply, or I will only look for demand levels in this asset. Okay, let's pick the last one. I think it will be more interesting maybe to try and choose I don't know, the gold. Okay, here is the gold, and okay, so this is the gold. And if I need to look, and I was willing to look for supply level now, a few small candles as you can see here, but you see the drop wasn't that significantly because this is 1H time frame. You can see one candle, two candles, three candles. They are all red, but in that case, I would zoom in to the 15-minute chart because maybe in 15-minute chart, you're going to see something like this. Down and up, down and up, down and up. And this is not what we are looking for. We are looking for the price to drop and run away from that level, fast and aggressive, as it been here. Okay? Then the price move up, touch this level again, fill all the unfilled orders that line down here, and continue the way down. Okay? One last thing before we're going to end. I'm looking for a good example to explain what I want to say now. And what I want to explain now in short, brief, is the difference between supply demand and support resistance. Don't confuse, it's totally different levels. And supply and demand, I would say it differently. Support and resistance is always initially supply and demand levels that tested few times by the price. For example, we have this supply, for example, here. Okay, again, not the best one to trade, but we have something here. We can see the drop in the price. The price touched this area here, fill the unfilled orders, and here, and here, and another half time here, and filled all the orders that were at this area. Now, what was originally supply became resistance after the price checked this level few times, and vice versa. What you're going to see is support. Okay, it's probably was a demand somewhere from the left that the price test this demand few times. As you can see here, you can see the few small candles, small rally, not the best demand, but that's the reason the price stopped here. Even after this significantly drop, see exactly where the price stopped. Okay, skip all the way through this demand and maybe this one, not the perfect one, all the way down to the next demand, touch this level here and here and here and here. What was originally a small demand here on the left become support area. Okay, and this is the difference between support and resistance and supply and demand. Supply and demand are much more critical level, and I wouldn't say support resistance is not critical level. It's a levels that usually I'm taking action. What I mean is once I reach support or resistance, I might manage my position, roll my stop loss, close part of the position as I said before. It is not a levels that I will look to open a position. Okay. I think that's all for today. I hope you enjoyed this free webinar and it gives you some added value for your trading journey. We'd like to get some feedback from you. And I wish you very successful and happy trading. You are more than welcome to, by the way, get into our website, findyourfx.com, and get more added value. We have 2 ebooks there that we provide for free. Ebooks that explain about supply and demand. I will write you down on the chat the website. We are a prop firm that providing funding program for forex trader. You probably know what is this. And this is our website. You can see this on the chat. And again, we have very soon, I think not yet, but very soon we're going to upload another page on the website, which is the Academy page, because as the new CEO of this company, one of my main mission is to bring in all this added value for traders, all the support, the added value, the education that traders need, and that was just the taste of it. So you're more than welcome to join and take a look and join our social media channels, because we are uploading into our YouTube and X and TikTok. Every day we're uploading a trading idea and more educational. But again, soon in our website, you're going to have for free 2 ebooks that contain almost all what I spoke about now, supply, demand, and more type of behavior of the price that will give you much clear picture of the charts. As you can see here, clear picture, no indicators, naked chart, what we called. So you can enjoy this for free. Thank you for joining us. I hope you enjoy it. And see you the next time. We're going to do it once in a while.